She signed 11. Give your Twitter to Dane and shit. Have him talk to us. You meant to do that. Yeah, that's all.
All right, getting started in like 2 minutes, and I'm recording this call too. So that way for the people that are on and need to like go back and reference it, I'm gonna upload it to my YouTube channel a little later tonight. I'll let you guys know when it's uploaded, but I'm gonna get started in just like a minute or so. I'm just gonna give anyone else a chance to get on.
Yeah, but that's cool. I'm gonna call with Tyson. Recording. You're on my pingo.
All right. So appreciate everybody for hopping on. Like I said, it is going to be recorded. What I am going to do first, make sure all you guys have your charts the same way that I do. Well, at least as far as the two indicators that I use. So I use moving averages, or I've started recently. When I've started having, especially these last couple weeks have been amazing. When you like actually utilize them, because like I'll see people have stuff on their charts that like they wouldn't even know what it means. So I'm gonna explain why I use them and what they are. So first one, like I said, is gonna be the moving average. So I click it twice because I have two, and for the first one, it's gonna be 8. So 8 for one of them, it doesn't matter if it's red or blue. But first one's going to be 8, and then the next one is going to be 21. And I honestly can't tell you the reason that they are those specific ones. However, they work. They work the absolute best. So I'm going to break down once again how I do my markups and kind of where I get my analysis from. So first example, I'm on USDJPY daily. And what I always do is I always look at the daily time frame. Why? Because I want to see the bigger picture. I want to see kind of what's going on in the markets. And first glance, we don't really have a trending market. You know how it's kind of, I'm sure everybody sees how it's ranging. And feel free to ask any questions at any time. But see how it's kind of, ranging within these areas right here. I guess maybe even farther, like right here. So it's been just kind of ranging. It hasn't really been doing anything. Kind of had to push down, and then as of right now, depending on what we see over the next couple of days, I expect USDJPY to probably keep going up. If anything, right now in the 4 hours, just retracing. But so I'm gonna explain the moving averages. So on the daily, I see that moving averages aren't really doing anything. Basically, what the moving averages are there for is to show the direction of the trend and when a trend can potentially change. So on the daily, bigger picture, the moving averages aren't really doing anything. They're super tightly squeezed, not really in any type of way. They're just kind of really close together. So I'm going to scroll down to a lower time frame. I'm going to go down to the 4 hour, and I'm going to see kind of what's going on here. So do you see how when this crossed, you see how it was going up, and then all of a sudden when this crossed, it started to go down. they started to fan out after it crossed. Fanned out, fanned out. Do you see how these wicked right here and it wicked right here? These are basically support. These are basically resistance and support lines. So it's kind of cool because you know how you have your support and resistance, you know, lines that you're going to put your horizontal lines. Well, what's cool is the fact that these moving averages basically help you snipe your entry. So, for example, when we see these crossing on the 4 hour, you could have bought when it crossed, which would have been probably right about here, and you would have caught this entire candle. And now it's kind of just chilling. Now, like, you know, what we see with market structure, and we definitely see that this is a bullish momentum right now. Well, what I want to look for is, I don't know if you guys can see this before I actually do it, but what this looks like is an inverted head and shoulders. And now market patterns are important to see, but also you have to be patient with them, because I've seen oftentimes where, you know, you see shoulder, see a head, you see another shoulder. That's what an inverted head and shoulders typically looks like. That's how it kind of plays out. However, I mean, I've seen a shoulder come all the way down to like there, here. It's not going to be perfect. You know, nothing is perfect. If it was easy and perfect, then everybody would be making millions in the markets. You know what we say? It's just a transfer of money from the impatient to the patient. So what I'm looking for with this pair is I see that we've had kind of nice rejection right here, which if I draw a higher time fib, I'm going to see it's – so right now it's retracing like the 100% fib. Not super important, but what is important are this quarter point. So that's what I'm going to go into in a little bit, our quarter point and quarters theory, key levels, extended resistance, support lines, etc. Right now I see for USD JPY, I see an inverted head and shoulders potentially forming. Tonight, I want to see a decline down to this area, and then further upward movement, especially after our daily close that we had today. I mean, that's an extremely bullish candle. That is, to be exact, that is a 140 pip daily candle, which on USD JPY is, I mean, for one day, that's pretty crazy. I actually had a buy-in. I actually bought it at right there at that 4 hour candle close. But what's crazy is I get my entries on smaller time frames, and I have tighter stop losses. And what's crazy is I entered in for a buy right here, right when these moving averages were kind of crossing, or crossing like right here, and I had my stop loss right there. Like, I'm talking, if I were down to the 5 minute, my stop loss was right there. So imagine having a 3 lot or 2.5 lots in and getting stopped out of micro pip. I'd be up over $3,000 right now. But you know, that's the markets. That's why I've kind of lately I've been noticing that you kind of have to have wider stop losses on certain pairs. You like to send out like certain stop or like high stop hunts, meaning extended wicks. For example, like right here. This was a stop hunt right here. You know, just things like that. Like right here, just things like that. Just the market trying to get, you know, collect orders. Because somebody's got to be losing money at some point. So basically, like, everybody just wants to be on the winning side, of course. So let's see. So obviously we saw, like I said, inverted head and shoulders on the 4 hour. Let me go back up to that. Okay. Inverted head and shoulders. Just like I said, we're looking around here, and then a push up. What I might see with this is you might see these moving averages kind of get closer together, like kind of how like they did right here. But they won't actually cross. That's what we want to wait for, is we want to wait when you can clearly see them cross and start to fan out. That's how you know your entry is A1, kind of like how I've been getting. I got mine last week. But anyway, So like I said, we want to see retracements about right here or in this region and to continue up. But we also might only get one down to right here or whatever. But this is definitely an interesting pair to keep your eyes on. I'm going to highlight a buy zone area, which is also 61.8 Fibonacci, which is a very important fib level, as I've talked about. If any of you guys have been consistently getting on my calls over the last months, I appreciate it. But 61.8 is definitely very important.
Should take the decimal.
So that's our potential buy zone. I might, depending on how the market forms, I might get in depending on what type of reversal candle I see. But definitely, I'm only looking for buys if it comes down to this area. It's honestly, if you were to buy right now, I feel like it'd be a little late, especially with these 4-hour wicks right here. Anyway, so this is what we're looking for USDJPY. I'm going to get into quarters theory. We'll do it on GJ. So key levels, how do you identify or put very, very precise areas in the market? I don't know if any of you guys have ever heard of the term psychological levels, but it's a very, very real thing. Just areas in the market that I really can't describe, but that will be very, very respected. And shouldn't be used as an only confirmation, but they are very important to know what they are. So like I said, they are whole numbers. Psychological levels are whole numbers. So you actually see this is already, it's kind of funny. These are all technically quarter points right here. So what I'm going to do is there's actually a book on it, but I'm going to break it down by major and minors. So like I said, whole numbers are going to be are the quarter points. So 140, price paying 140 is actually a major quarter point. So I'm going to type in major QP as in quarter point. There's a book on it called Quarters Theory that you can buy and read if you would like to. I've kind of skimmed through the book. I haven't read the whole thing just because I kind of pick up quickly on stuff, so I know kind of how it works. But the book is good. The book is good too if you just want a little reference if you forget certain things. But 150, I'm going to do it up to 160. So every 1,000 pips is going to be a major quarter point. All right, so you guys don't see it on here, but I'm going to go out to the daily. And you see them up here. Like, for example, just right here, 160. You see that? That was actually Brexit. I do believe July. Yep, that was Brexit. So what's crazy is I think it was a key fib level too. Brexit, people say it was, news, whatever. That was going to happen no matter what. You see how this Fibonacci is 78.6? Look at how precise that is. Everything in the market is precise. Do you guys see that? You see how it's literally on top of it from a wick to wick? Look at how precise that is. And look at where it stopped. Negative 61.8. Look, it's so precise that I can't even describe it. But I mean, you guys see it, this is perfect. If you would have sold that when you saw a candle closure, I mean, you guys would have caught 2,600 pips. 2,600 pips. And that's one daily candle. In one day, you would have made $2,600 on a 0.10 lot. You would have made $26,000 on one standard lot, or you would have made upwards of $130,000 if you would have had a 5 lot. $130,000 in one day. That's power FOREX. I can't even, it's insane. But so you guys can see this on the daily time frame. So I'm just gonna keep market on daily. And then within the 1,000 pip ranges, we have what's called miniature quarter points, which are every 250 pips. So I'm just going to do mini QP. And it goes in quarters. So, quarters theory is quarters. So this one is going to be 142.5, okay? Because you see we have 140. 250 pip increment is going to be 142.50. the next 250 pip increment. Well, what is 25 plus 25? Or 250 plus 250 is going to be 500. So this is our midpoint, 145. Our next one is 147.50. Just break it down in quarters. 25%, 50%, 75%, 100%. It's the same thing. You just ignore these numbers. So 0, 25, 50, 75, the next whole number. So now what are we going to do? We're just going to do the next one. We're going to do 152.5. All right, we're going to do 150, 155.00. Next one is going to be 147 or 157.5. Oops, 157.5. All right, and then we are next up to the whole number. But as you can see, 140, very, very respected right here. I'm not saying it always respects it. I mean, like you guys see, like this happened right here. It came down, did whatever. But it is a very interesting area to look at when the market is near major or minor quarter points. You definitely want to be aware of that. And then within those, you can do 100 pip ranges. So you can literally break it down to exact 25 pip increments. So like let's say we're gonna do let's see, we're gonna do mini QP. All right, so we'll do 143. Okay, so what's gonna be next is 143.25. Which, look at that. You see how it wicked? I actually bought GJ right there, and I took profit a little early up here because I saw 143. You see how it wicked here in the past? It wicked, and then you see how it broke, retested, shot up. Perfect entries. That's how you snipe. That's how you snipe your entries. And I'm actually going to add the indicators. I forgot to on here. Moving average, hit it twice. All right, and then it's 8, and the other one is 21. And we'll do this to red. All right, so you see how right here you have a 143 mini quarter point, 100 pip QP. You have this moving average coming up, wicking. You see how it's wicking as this is acting as a support, okay? Acting as a support with a retest of a miniature quarter point, previous area of resistance. Do you guys see how this is an entry all day? You guys see that? Big, you have a doji reversal, bullish candle, retest, 3 confirmations right there for a buy. I mean, and if you're moving your stops in a profit, you could be holding it, and you could be up 114 pips right now off of that little entry right there. Does that make sense, or am I confusing anybody?
No, that makes sense. So after the quarter point though, so you go in like 100 pip or not 100 pip, 50 pip ranges or 25.
25 pip ranges. Yeah. So like if you want to see a potential area of a reversal, then do these 100 pip ranges. Because you can, I mean, like, you guys can back test this all you want. Look at, do you guys see how this is whole numbers. This is still whole numbers. Do you guys see how one entry, I wouldn't have entered right here because of how bullish it was. I would have waited. Look how it wicked. Here, I'm going to make it bigger. Look how it wicked. Kind of came near that EMA, or not EMA. EMA. The moving averages wicked right here. The moving averages are still fanned out. We're still looking for buys. You guys see how it wicked right here again, near a mini QP, which is 144. So now what we're looking for is we're looking for the next, 25 pip range. And if you don't want to do that, you can do every 50 pip range. You see how it wicked. You see how it's kind of trapped in this little 25 pip area. So right now it's just kind of messing around. If you were looking for a potential buy or a sell, I'd be looking for it to either hit here again, see a reversal, sell it. And I mean, I've seen pairs bounce off of one let me see if I can all right, this was 143, but I mean this right here, this was like 142.75 or around that area. And I mean, it shot down a lot. Like, just because these are miniature quarter points doesn't mean that it's only going to drop 25 pips. I mean, like this, you could have bought it right here, and you could just be moving your stop up every mini QP. So like, if you bought at this entry, you could have put your stop loss right here when it broke above. And if you want to, wait, if it broke above right here, you can set your stop loss right here. So that's how you're securing trades. People, will always ask me like, well, when do you want to take profits, stuff like that. Well, if you're moving your stop loss and profit and you're keeping an eye on where price is, I used to always ignore these numbers. These numbers are extremely important. I can tell you exactly where Euro USD, Gold, USD JPY, and GJ are all at off of their price without even looking at it, just because I keep an eye on where price is moving. So right now, like I said, it's kind of just chilling around this area. The moving averages are still really fanned out, so we're still looking for bullish momentum. Let's go on a 4-hour. We'll see how the 4-hour is doing. It wicked right to let's see, what was this, 144. It wicked to 144. It's been retracing. So tonight, it might be chilling. It might break above. We might see 145 with how these moving averages are fanned out. But we could potentially see 145. I wouldn't be surprised if we did. I'm going to do one more just because I have kind of OCD with it. So 147.5. And it works for every single pair. Like, it literally works for every single pair. I mean, look at this. Perfect sell right here, bam, off of 143.25. Perfect. These are called tweezer tops with a bearish engulfing in a downtrend. Okay. I might sound like I'm speaking Chinese, which, trust me, when I first started learning how to trade, I thought everybody's speaking a different language. But now it's just, when you spend as much time studying it as I do and on the charts, it just, it comes naturally now. And, you don't think about it. So right now, or like back here, we had a downtrend. Like I said, we have a push off of 142.50. We came back up. I saw price was struggling to break this area right here. We're still in a downtrend because these moving averages are still fanned out, as you see. So we're not looking for buys. 143.25. Bearish engulfing, you could have gotten in on a sell right there. And I mean, if you would have just kept moving your stop loss down, 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 you could have got 100, 120 pips right there. I mean, I can do these to see exactly where price was rejecting. 142.25. See 142. Yeah, I mean, I want you guys to like actually see for yourself. And it's all repetition. Like, bam, example right here. Came off of 142.50. We see a reject down to 142, which is a strong 100 pip quarter point. And what did we see? We see a Morningstar reversal close. That's a nice buy. As you see the moving averages cross. Moving averages crossed right here. Morningstar reversal off of 142 quarter point. You secured, take profit could have been 143. You could have waited for this candle to close. You could have took a sell, wrote it back down, waited for, this is called the double top right here. You could have sold it all the way down here. It's beautiful. Like, honestly, trading is like an art. That's what I tell people. And right here, 140, inverted head and shoulders. More and more confluences. You have, here, I'm going to show you the inverted. See a left shoulder. We have our head down here. We have a long shoulder, right shoulder, and I mean, that's where it's at right now. So inverted played off the 140 major quarter point, 1,000 pip range. We saw a strong wick closure right off the moving averages. We have a nice cross right here. Hold on, let me delete it so you guys can see the cross. Beautiful cross right here, as you can see, literally right there. Bam, there's your entry. Some people probably would have gotten scared off this long candle, but this is only a 4-hour candle. That's why we wait for 4-hour closes. to take trades. So you could wait for the 4-hour close, right? Morningstar, like I said, right off the 21 moving average. And I mean, you could have held your buy all the way up here. Another inverted head and shoulders inside of a big inverted head and shoulders. I mean, it's simple. Like it's.
Hey, quick question though. How would you enter though? You see your mini QP at 143.500. You see that long wick, even though it's a bullish candle.
143.5.
Like, would you just? Yeah, you see that long wick, and then somebody would normally be like, well, based off its strong push up, would you just go to a lower time frame, like a 1 hour?
You want to flow. You want to flow with the market. So like, you see how bullish the market is. You see how bullish the market has been. You don't want to really go against that unless you have a strong bearish candle that's breaking these. So like you said, it was 143.250. It was 143.250, right? Is the one that you said?
Or 143.500.
143.500. So yeah. So on the 4-hour, you see it wicked, but on the 1 hour, you see it broke past with this bullish candle, and then you saw a little bearish retest. So that's why, like, I always look at how the 4-hour candle closes, but also at overall trend. So we have a big inverted head and shoulders and a smaller inverted head and shoulders. This is a bullish engulfing candle. So really, we're just keeping an eye on how the market's moving. We don't see any type of super strong bearish movement. So we're not looking for any sells. That used to kill me all the time. I used to want to snipe sells. But we have no reason to sell. One, moving averages are fanned out. We have a break above this half point, 143.5, a little retest. You could have bought right there, and I mean, you could be up, like I said, like 50, 60 pips right now. And I mean, we're still looking for buys. You know what I mean? We're still technically looking for buys. H4 is extremely bullish. We could see, I'm not buying until either I see a break above 144.250, and probably just holding it until 145, because 145 seems to, that's going to be the next, that's going to be the 100 pip rate, or that's going to be the midpoint of a major quarter point. So we have our quarters, we have our majors, our holes, and then we have our half points, which 145 is 500 pips between 140 and 150. So this, I can make a different color. All right, so this is, like I said, this is our half point. So the whole numbers, the 140, the 145, and the 150, I don't want to say they're stronger than like the miniature quarter points, but they're more interesting to watch how price is reacting among that area, just because it is such a strong psychological level. So before I move on, is this making sense, like, to everybody? Because trust me, like, if it's not, I want you guys to tell me, like, you know, like, no, it's not making sense, like, go over something else. But if it is making sense, then I'll move on to the next thing. So all this is good for you guys, right? If not, type something in the chat box if you have a question. But if it is good, then just hit 1 if it's all making sense. Just because, like I said, I want to make sure you guys are really getting it. Sweet. Dom, I know you were asking a question. So that makes sense.
No, hey, just by eyeballing that and looking, would you call a sell at the 145 level just by seeing that spike? Price hasn't broken that in a while, actually.
Right here?
Yeah.
You know, it really depends. I'm gonna go out to daily. We'll see how daily is at 145. So 145, we saw a big push below, and yeah, it wicked under it. So it's definitely, that's why I say, you know, these are really key levels to keep your eyes on, or really important levels to keep your eyes on, because we could see price break above till about 144.75, it could come down to about right here. So, I mean, it could break above, it could come back down right here. And, I mean, we could just have an extremely bullish candle like we had down here. And, I mean, it could easily just break through, and it could retest on the opposite side. So, like, you see how it kind of, how it did one of these? You see how, like, the market likes to throw these out. I've noticed that a lot. The market likes to throw these little random bearish retraces that I just literally completely ignore, just because it is such a bullish trend. So in order for me to be considering sells, I would need to see you can also look these up too. Anyone can look these up if you guys don't know what they are, but like a evening star reversal off of a 4-hour time frame, a daily reversal, a doji, a bearish engulfing. I would need to see some type of really strong reversal signal in order to start selling this. Probably a strong bearish break below like a couple of these quarter points, these miniature quarter points. And then I would just get in on a retest, and I'd probably sell it down to about right here. So, which is 143. Just because this is a super strong area of it's going to be a super strong area of support because it was resistance. So I would probably set, I mean, once again, you don't have to set take profit, keep moving your stop loss and profit. But if you did get a sell around this area, I mean, you're looking at 180 pips, which isn't bad. It's a good trade. It'd probably take a couple of days. But that is what we're looking for. I think this on the free version right now because I just kind of in a hurry. So I'm going to actually end this call, and I'm going to send a new link literally in like 2 minutes. So hang on, and I'm just going to send a new link, and then we'll be good.